In the ever-evolving landscape of digital finance, Bitcoin once again finds itself at the epicenter of intense speculation and analysis, standing precariously at what could prove to be a defining juncture for the cryptocurrency sector as a whole. With prices hovering around the $63,000 mark and critical support levels being tested amid fluctuating macroeconomic signals, market participants from retail traders to institutional giants are closely scrutinizing every movement to determine whether this represents the onset of a prolonged breakdown or the foundation for a robust rebound that could propel the asset higher in the coming weeks and months. The tension is palpable as Bitcoin consolidates following its impressive all-time high above $126,000 reached in late 2025, and the coming days and weeks may well dictate the tone for risk assets across the broader financial spectrum. Welcome to Crypto Hub, your trusted source for clear, data-driven insights into the world of cryptocurrencies and blockchain developments. Today, we are examining Bitcoin's recent price behavior and the wider implications for the entire digital asset market, carefully weighing the technical structures, on-chain dynamics, institutional flows, and macroeconomic backdrop that together place the leading cryptocurrency at this critical turning point. Our goal is to provide a balanced professional perspective grounded in observable data rather than speculation, helping viewers understand the forces at play without unnecessary hype or alarm. As of the most recent trading sessions around mid-June 2026, Bitcoin has been trading in a range centered near $63,000, having experienced a notable pullback of several percent in a single session that brought it into direct contact with the psychologically and technically significant $64,000 support zone. Earlier in the month, the asset had managed to push toward intraday highs near $67,000, reflecting a brief period of resilience and buying interest after prior volatility, yet that momentum proved short-lived as selling pressure re-emerged. This movement comes against the backdrop of a substantial correction from the late 2025 peak, representing roughly a 50% decline that aligns with historical patterns observed in prior market cycles, where strong advances are frequently followed by extended periods of digestion and reaccumulation. Market capitalization for Bitcoin currently sits near $1.29 trillion, with 24-hour trading volumes fluctuating between $25 billion and $35 billion depending on the exchange and time of day, underscoring that liquidity remains healthy even as sentiment has grown more cautious. Technically speaking, the $64,000 level has emerged as a focal point that many analysts describe in terms of a decisive test. On the downside, a sustained break below this zone, particularly if accompanied by increasing volume and a close beneath $62,000, could open the door to further downside exploration toward the $60,000 region or potentially the $58,000 area that has acted as a notable floor in earlier consolidation phases. Chart patterns observed in recent weeks, including what some technicians identify as bearish flag formations or developing head and shoulder structures on shorter timeframes, have contributed to this cautious outlook, while momentum indicators such as the relative strength index have dipped into territory that historically signals oversold conditions, yet has not yet produced a convincing reversal. Resistance overhead appears clustered between $66,000 and $69,000, with a decisive reclaim and hold above $70,000 required to shift the near-term bias firmly back toward bullish continuation. Volume profiles suggest that significant buying interest has historically emerged near the $60,000 to $62,000 band, providing a potential cushion, but any failure to defend current levels could accelerate liquidations in leveraged positions and exacerbate downward pressure in the short term. On-chain metrics present a nuanced picture that adds important context to the price action. Long-term holder supply has climbed to record levels exceeding 15.8 million Bitcoin, reflecting the strong conviction of investors who acquired coins years earlier and continue to refrain from selling even amid price weakness. This accumulation by patient capital can serve as a stabilizing mechanism, reducing the available float and limiting immediate selling pressure. At the same time, however, the growth in long-term holder balances has coincided with relatively muted new demand from shorter-term participants, as evidenced by declining short-term holder supply and slower monthly growth rates among whale and dolphin cohorts. Some datasets indicate that whale balances in the 1,000 to 10,000 Bitcoin range have contracted on a year-over-year basis at the fastest pace seen so far this year, a development that echoes patterns observed during previous periods of sustained price weakness. Counterbalancing this, certain perpetual futures platforms have shown large traders maintaining or even increasing net long exposure in recent months, suggesting that sophisticated participants see value at current levels and are positioning accordingly. Dormant wallet activity, including occasional large transfers from addresses inactive for over a decade, continues to draw attention, though such movements do not always translate directly into immediate market impact and must be interpreted alongside broader exchange flow and spending patterns. Institutional participation through spot Bitcoin exchange-traded products remains a cornerstone of market structure, with cumulative net inflows since the product's launch exceeding $50 billion and representing hundreds of thousands of Bitcoin acquired on behalf of investors. These vehicles have provided a consistent bid that has helped underpin prices during periods of retail hesitation, effectively channeling traditional capital into the asset class in a regulated and accessible manner. Recent daily flow data has been more mixed, with some sessions recording modest outflows or reduced buying intensity, which has contributed to the current consolidation and heightened sensitivity to price levels. Nevertheless, the overall institutional footprint, including corporate treasury allocations by firms that continue to add to holdings on a regular basis, supplies a layer of fundamental support that was absent in earlier cycles. This structural change differentiates the present environment from previous bear phases and may limit the depth or duration of any potential breakdown should one materialize. Macroeconomic conditions are exerting a meaningful influence on risk appetite across asset classes, including cryptocurrencies. The Federal Reserve's decision to maintain the target range for the federal funds rate at 3.50 to 3.75%, coupled with signals that a meaningful portion of officials remain open to further tightening if inflation data warrants, has introduced a note of caution into markets. Higher for longer interest rate expectations tend to pressure valuations for growth-oriented and speculative assets by increasing the opportunity cost of capital and strengthening the dollar. Bitcoin, often viewed through the lens of a risk-on instrument despite its evolving narrative as a store of value, has not been immune to these crosscurrents. At the same time, the broader economic backdrop features resilient consumer spending and corporate earnings in certain sectors, which could support a soft landing scenario and ultimately prove constructive for risk assets if inflationary pressures continue to moderate without triggering aggressive policy responses. Global developments, including geopolitical tensions and shifts in trade policy, add further layers of complexity that traders are monitoring for any spillover effects on liquidity and sentiment. Within the wider cryptocurrency ecosystem, Bitcoin dominance has remained elevated in the 56 to 58% range, indicating that capital rotation into alternative assets has been limited and that Bitcoin continues to capture a disproportionate share of attention and flows. The altcoin season index, hovering near 30, underscores the absence of broad-based outperformance among smaller capitalization tokens, many of which have experienced sharper percentage declines during the recent pullback. Ethereum and other major smart contract platforms have mirrored Bitcoin's consolidation, but with somewhat greater relative weakness, reflecting both sector-specific developments and the general risk-off tone. Total cryptocurrency market capitalization has fluctuated in line with Bitcoin's moves, remaining well above levels seen during the 2022 bear market, yet considerably below the peaks achieved in late 2025. This high dominance environment often precedes periods of either renewed Bitcoin leadership that eventually lifts the broader market or extended underperformance by alts if macro conditions remain challenging. Examining the case for a potential rebound, several constructive elements stand out. The depth of the correction from all-time highs has brought valuations back into territory that some long-term models consider closer to fair value or even attractive accumulation zones relative to historical cycle averages. Strong long-term holder conviction, evidenced by record supply held by this cohort, suggests that any near-term selling may be met with absorption rather than capitulation. Institutional infrastructure, particularly the established exchange-traded product complex, provides ongoing demand channels that were unavailable in prior cycles and could accelerate inflows if price stability returns and sentiment improves. Historical precedent shows that Bitcoin has frequently experienced sharp recoveries following tests of major support during bull market corrections, often catalyzed by a combination of oversold technical conditions, positive on-chain shifts such as declining exchange reserves, and favorable macro surprises. Should the $64,000 level hold and be followed by increasing volume on up moves, a short covering rally toward the $69,000 to $70,000 zone appears plausible, potentially setting the stage for a more sustained advance if accompanied by renewed ETF inflows and constructive economic data. Conversely, the arguments supporting a more pronounced breakdown scenario warrant equal consideration. Elevated long-term holder supply, while indicative of conviction, can also reflect an absence of aggressive new buyers willing to step in at current prices, leaving the market vulnerable to incremental selling from shorter-term holders or profit-taking by earlier accumulators. Technical structures on multiple timeframes point to the risk of cascading liquidations if key supports give way, particularly given the leverage present in derivatives markets. Macro headwinds from monetary policy uncertainty and any resurgence in inflationary pressures could further dampen risk appetite, prompting continued outflows from exchange-traded products or reduced corporate buying activity. In such an environment, Bitcoin could revisit the $60,000 area or lower, testing the resilience of long-term holders and potentially triggering a broader risk-off move across digital assets. The high level of Bitcoin dominance, while currently a source of relative strength, could also mean that any renewed weakness in the flagship asset would disproportionately affect overall market sentiment and liquidity. Market observers are therefore focusing intently on a handful of key variables in the sessions ahead. Daily and weekly ETF flow reports will provide real-time insight into institutional appetite, with sustained positive inflows likely to support price stability and any reversal to consistent outflows potentially accelerating downside pressure. On-chain indicators, particularly shifts in long-term versus short-term holder supply, exchange reserve balances, and whale transaction patterns, offer early signals of changing conviction. Technical developments around the $64,000 support and the $66,000 to $69,000 resistance band will determine near-term directional bias, with volume confirmation essential for validating any breakout or breakdown. Macroeconomic releases, including inflation readings, employment data, and Federal Reserve communications, remain critical external drivers that can override crypto-specific factors. Funding rates in perpetual futures markets and options positioning around key strikes will also reveal whether leveraged participants are positioned for continuation or reversal. For market participants navigating this environment, disciplined risk management remains paramount. Position sizing appropriate to individual risk tolerance, the use of stop-loss orders or options-based hedging strategies where suitable, and a clear distinction between short-term trading decisions and longer-term investment theses can help mitigate the impact of volatility. Diversification across asset classes and within the crypto space, while recognizing Bitcoin's dominant role, may provide some buffer against sector-specific shocks. At Crypto Hub, we consistently emphasize that cryptocurrency markets are inherently speculative and that past performance, including the strong institutional adoption trends observed in recent years, does not guarantee future results. Investors are encouraged to conduct their own thorough due diligence, stay informed through multiple reputable sources, and avoid making decisions based solely on short-term price movements or social media narratives. Ultimately, whether Bitcoin experiences a breakdown below critical support or embarks on a meaningful rebound from current levels will depend on the interplay of the factors outlined above. The market stands at a genuine inflection point, where the next sustained move in either direction could influence sentiment, capital flows, and positioning for an extended period. Data currently presents a balanced yet cautious picture, with strong structural supports from long-term holders and institutional products coexisting alongside technical vulnerabilities and macro uncertainties. As conditions evolve, Crypto Hub will continue to monitor developments closely and provide updates grounded in evidence rather than emotion. That concludes our analysis for today. Thank you for joining us here on Crypto Hub for this in-depth examination of Bitcoin and the cryptocurrency market at this pivotal moment. We encourage you to subscribe for regular updates, engage with our content thoughtfully, and always approach digital asset decisions with careful consideration of both opportunities and risks. Stay informed and stay disciplined. This is Crypto Hub signing off until next time.